recording, but for anyone that missed the previous part is unchanged. Looking for movement here or here, and really not looking for a swing in the middle. We can sculpt here, okay? We can sculpt these lines. The plan is unchanged from the last streaming, so go have a look at that. We're looking to position ourselves here, long or short, or here, long or short. Trade the extremes for swings. And for scalping, as I said, we're going to trade these levels. Very precise, very precise. So again, be careful with the sweeps for liquidity. I had a mentoring today about this topic, so don't jump on the first bounce on support and resistances. Okay, wait for another touch if it's a touch. Wait for a sweep if it's a sweep. Okay, it's going to be much easier and much less stressful if you just wait for these moves, right? Yes, of course, you have things like these that are a little bit riskier. For example, opening a short here, which is respectable positioning, okay, but can't be right all the time. Just manage your risk, set your stops, don't use any leverage, and you will start making significant returns on these occurrences, okay? Same here, I wouldn't, push into the resistance or short into the support. Just wait, see if you have a break above, a healthy one. If you see high velocity moves are generally rejected, guys. So you always get a second chance when you see these high speed moves, more often than not, okay? These moves are short-lived, so you're going to have a second chance at that, okay? If you miss this long, don't ape, because look at that, very fast will meet a rejection. But you can attempt again, and 1-2 touches. On the second touch, this is a much more sustainable long position to take. Now, let's go back to the big chart, and then we play this game also on the smaller time frame. Okay. So why my bias? For those who read the article, the last one on price action, you already know it's really, I just try to add one more level of confluence here, and that would be a Fibonacci level that basically matches 100K. We have the golden ratio here, 0.618, which is the main point of interest. But an extension to the 0.786 is not out of the question, especially because we have 100K here, which is very attractive. Okay, we're monkeys, we like round numbers, so that's why I'm looking at this level, check the behavior, and then speculate. If we get rejected, we might touch again 0.236, first point, okay, and also last support. At that point, I expect 80K to melt and pierce through. But if we head onto the 1 level, okay, Fibonacci 1, then we are definitely looking for another extension to the other golden ratio, okay, which is 1.618, same thing. It's not that complicated. Okay, there's a golden ratio here, price tends to be attracted to this. And machines too, is that it's not much of a cabal, but more that algorithms, they also trade this stuff. So same as they trade MAs, support, resistances, and stuff like that. So those are the natural continuation patterns that even machines follow, just because they're coded by humans at the moment. So you can play the same game on the smaller time frame, just going over basically what was in the article, but I'm doing it live. Okay, this is not. I don't like this one. The 5 minute. Okay, so okay, swing high and the swing low. Okay, this is the swing low. I just draw it here because I don't want it in the way. But a good target for a long from here, when the swing is finished, a good target for a long is around 618. You take, I don't know, 50%, move your stops at break even, which includes your fees, and let it run. Take a little bit more, 0.786. If you cross the one level, okay, which is here, the one level is at 89.4, which we can place around here. At that point, let it run. Try to hit the Fibonacci, this one, the 1618, okay? And just to demonstrate this thing, I just move it, but you see, the one level is here, the bottom is here. 1618 again. So if you let it run, of course, take profit consistently and move your stops at entry, so you don't have any risk, you bagged some profit, and you won the trade. Okay, the rest is just something more, but you know, if you just let it run here, like let's say we didn't get the perfect entry, so let's say we long a little bit above, just trade in the Fibonacci, and the stop probably here. Let's give it a 0.5 of tolerance because it's a big move, but could be smaller, could be a little bit tighter. But again, it's a 3.6%. Of course, you take some profit here, and I'll do a little bit here, and then you let a 30% of your original position run. Let's get profit. Okay, do this thing not every day, but 3-4 times a week, and of course you lose some trades, but the chances that if you trade supports and resistances, like okay, this is a bounce here, so that's not my ideal setup, but if you take it here and you still apply a Fibonacci, that's actually the best entry for Fibonacci traders. Okay, 382 is a very safe entry for Fibonacci traders. Also 0236 is an early entry. 0382 is a safe one. So once it tests, which matches basically this level, once it touches, you have a confluence, a support, so a resistance that turns support, Fibonacci there, elongate, very safe, like in and out in a few minutes here. Okay, couple of hours. You let it run 50%, 30%, you still make a 2% here. It's not bad. It's not bad at all. And yeah, not much. Tomorrow I think we will have more movement, or at least more volume, and movement will follow. And yeah, that's it. So shoot the questions if you have any. Yep. Okay. Give me some questions if you have any. And in the meanwhile, I will go with the updates. So, um, this week, okay, starting tomorrow probably, we start. The guys at Blowfin will start a promotion. Okay, I think there will be like a bonus. I don't remember the percentage. Would have been 10 or 20% bonus on deposits. So if anyone is interested in trading Bluefin, you have the you have some cash back basically on the promotion. Like they give you a bonus, and I managed to verify that the fees on the discount, and you also the fees on uh, the discount on the fees. Sorry, I'm jet lagged, and I made sure that the cashback was the 25% of fees. So that's all set. And I think the promotion is going to run for 1 or 2 weeks. I remember someone asked, maybe Aussie Mike. So, and Blowfin is integrated in Silico Terminal. Also in Silico Terminal, there will be basically a scalping course, and I would explain in depth how to use the terminal because a lot of the scalping can be done on the DOM, okay, depth of market tool. You can place orders directly on the DOM. So let me show you the one from Kiyotaka, but basically, so this is the DOM, but on the terminal you can click and place orders here. It's useful, and at that point you don't really need a chart, okay, but we need to learn how to do it. So I will explain that as well. There's different techniques for scalping. I trade both charts and DOM depending on the type of day, depending on my mood, depending on my level of focus, because the DOM requires a different type of focus. It's not more or less just a different type of focus. So there's that. Um, I reached out to the guys at the terminal and they said they were fine with it, so the articles will include explanation on the terminal. And that's where I do most of my trades. It's free, it's absolutely free, so there's nothing to spend, nothing to shell. It's just a good tool, and it's really institutional level execution. It's very fast, so for scalping, especially if you have a little bit more size, speed becomes vital. Okay, and also there are ways to save on fees, like using chase limits and things where you basically execute almost at market, but you pay as a maker. Okay, so you save a lot on fees. That's important if you're scalping because it can make the difference between a very profitable position and a less profitable position, um, especially on the DOM. Oh yeah, also breakout. There will be a promotion like probably a couple of weeks later because I didn't want they both wanted to do promotions, but they didn't want them to overlap. So breakout will do some promotion a couple of weeks later. Um, it's not a lot. I think it will be a giveaway or something. I don't know. Um, so yeah, there's that. But they will be split otherwise. It's just going to be messy, and it's going to be an advertisement platform and not a channel. Um, are you talking about market profile? Not today, not today, but we can have a look at it. We can have a look at profile. Um, but I need to change. Oh no, you can see this window, right? Yep. Yes. Let's have a look at profile. Oh. Okay. No, I didn't really care about profile today because the market is very balanced, as you can see. Um, so these are daily sessions, okay? Um, value area, we are finally above value area. Now we have to see if these hold tomorrow. So don't get too excited until we get a confirmation. We had a poor high here yesterday. It was taken. Is this a single print? Apparently. We have a single print here. So, if we check the level, our single prints are pretty much here. Okay, let me see the 1 hour. Okay, single print here. So a retest here is definitely possible. Single print. Then it matches, I think, the poor high. Just let me verify that. Yeah, kind of. So, volume profile is more about areas than levels, ranges. So yeah, retest here and then move up would be healthy. Again, we're not out of the woods, not until 96, 97, 100. Be mindful of that. Okay, if you see spikes, like these ones, it could be an interesting place to take a short, but you want these spikes to be out of the range. Okay, you don't want the spike to be here. The spike should be in this area. So in that case, if you have a good timing, so if you can read the top, you're never going to be perfect, but if you can infer it's a top and set a tight stop, it's a low risk trade. And we're not here to always have a 100% win rate. That's not realistic. But if we can take high probability trades with very low risk, as in we have a spike and a rejection, our stop is going to be above that violent rejection, like this one, for example. Okay, I also made a video about this. Okay, above such a violent rejection, you can short with a lot of confidence. Same as here, you can short with a lot of confidence. Kind of here, but here, what sort of confidence do you have here? Yes, it's a rejection here, but what sort of confidence do you have? Not much. Okay, and chances are you maybe make a little pips here, get cocky and get stopped out in a matter of hours. Okay, because this is a 30 minutes chart, so it's easier to just wait for these, for a swing, or these lows. Okay, same here, rather than attempting to start a swing here, which is unlikely to happen. Yeah, if you were long from here, GG, but I'm not touching this. I'm scalping this price action here and waiting for a large move. Again, it's about probability. Okay, that's it for profile almost. Yeah, very balanced area. Okay, if we merge these profiles, we just have a big belly here. Just a big belly. We have a move above the value area. That's interesting. That's good. Let's see what happens. Not predicting the future here. So if we continue with this uptrend, then stay focused around this area. Okay, that's what I would do. That's what I would do. You're free to do whatever you want. This is my take on the matter. Leaning bullish here, breaking the trend line. Do you believe this could be the move to 100k? How do you look for entry to catch the move and not be on the wrong side of the trade? Yep, that's my point. Like, if I'm in the middle here, okay, it's very easy to be on the wrong side of the trade, in my opinion. But I'm very conservative. Okay? I don't like to lose money, so I'm very conservative. Um, we have a bounce above value area here. So your best bet would be, if you have to take longs intraday, you want to do it around this level. Okay, this level, this level, this level, this level. Okay, because as you can see, they all bring a move. Now these moves were all retraced, and that's why I scalp. I see a profit, I close my position, that profit is in my bag. Okay, um, until there's a clear trend. This stuff is not a clear trend. This is a lateral. Okay, so as I said here, I wait to see if it breaks. Okay, maybe a retest, and then up. Then here, of course, on this retest, it would be a higher probability trade for many reasons: Fibonacci, profile, um, whatever you look for. Okay, so you want to enter at a close here or the next candle. Set your stops like below the sweep for liquidity. Ideally, I don't know how big it's going to be, but ideally below a sweep for liquidity, if any, and that's where you catch the move to 100k, if that's your thing. Like me, if I see something very obvious, I'm going to take it. Otherwise, I'm just going to scalp. And if I'm not sleeping, because if it's down in the New Year's session, I'm probably going to be sleeping. So there's many factors. If you're on the charts and see something that is convincing, but look for it at the levels. Here, here, here. And also manage your trade, because there is a lot of stuff in the way. And these levels can become extremely sticky if volume and commitment are not there in the market. So also these levels, they can become extremely sticky. And I don't want to get fucked here. I can just trade from level to level and wait. And then it's going to be the next one. Get the trade, get to the level, my stop is going to be tight. Because the chances that we see these, and then these, and then these, and then these, and then these are there. So where do you place your stop? If you're right, you get here, your stop was here, taken out, and then we go again. Level to level in a situation like this, until there is not a defined trend, for me it's easier. We do little steps instead of trying to catch a big move. Then when things are clear, like if we get a rejection in this department, then I have much more conviction in, break above, retest, rejection, and down. Something like this. Here I'm going to smash sell and see you at 75, probably. But yeah, other than that, I go easy, because at least until above 94.5, there's a lot of things that could go wrong. So I advise caution. High conviction is going to be here and down here. Okay, the below 82, around 80. Okay, see the trend lines also. It's going to be interesting if we get there. Or here we can just have a swing long. I'm not saying we're definitely reversing. I want to see how it plays out and then set my long or my short. If I'm wrong, who cares? I've been trading, scalping. So I don't have to wait a month and a half for my position. Next, Dwarf Mage. So these setups seem to be so simple you could automate them. Do you use any bots, scripts for them? Coming Silico server-side execution look like a killer feature. Yes, it does. Good chart, make a script, it fries. Yes. I think you're right. I think the type of execution is basically a very simple algo. That's what it is. With the fact that you have the CLI, so you can just type words and get the type of execution you want. So I do not automate much. Sometimes I did. Uh, it still requires management. I am trying to get a quant for that, and I'm in talks, but I will know more in 10 days because I have some strategies, but I also don't have the technical knowledge for that, but other people do. Because what I want to do is a little bit more complicated than just an algo. You can do an algo with, like, even with a clanker if you're not a coder, and just plug the terminal, your basic terminal, the computer terminal, not the in silico, um, and use that to just trade your very simple algorithm. And then, if you traded VWAPs, okay, mirror version on VWAPs, that thing is profitable if you can set it with the right parameters and using the best practice. Definitely is something that I could do, you can do, uh, almost anyone these days with AI also could do. And yeah, also the in silico, you can automate some stuff, or you can, plan some trades that you wouldn't be able to do. For example, to set a long, like a limit order above your price, you can do that with the type of execution. I don't suggest you try to make a limit order like uh, like this at the moment, but you can do it with that function. Absolutely. So yeah, it's going to be covered in an article, probably not a series, probably a standalone article, because I have been chatting a lot with Sokyo, and uh, there's some cool stuff coming up with the terminal. I can just tell you that. Uh, but yeah, that function is going to be very interesting. Most welcome. Why not aggregate TPO noise? I mean, that's a legit question. So as you noticed, I chart on Binance Spot, mm, and I trade on other platforms. Like I trade on Hyperliquid. Why? Because I think that Binance, since at the moment is the exchange with the most volume, has the clear, mm, has a very clear signal. Okay. If you look at Hyperliquid on the 1 minute chart, for example, um, okay, this is a weekend, but there are weekdays on Hyperliquid that are like these, okay, flat, and then price is just adjusted up or down by the market maker, or there's when the price is spiking on another exchange, so the market maker will prevent arbitrage that way, and so on. So too many exchanges, half of which have this sort of synthetic, it's not synthetic volume, but it's a lot of work for market makers just to adjust and make sure the price matches other exchanges. Yes, it gets a bit noisy in my opinion, so I just prefer to big exchange. I used to do BitMEX for a long time, for many years, until BitMEX didn't have enough volume to do that. Midmex was amazing. Now this is a spot chart. Sometimes I chart futures, um, but I think that Binance Spot is like okay for me to chart this stuff. Then, of course, if I'm scalping, I'm going to look maybe if I'm scalping futures, I'm going to look at Binance futures, and then I also have the chart on the Silico terminal, and that's going to be set on Hyperliquid, but they match almost by the single dollar, by the last digit. On other, let's say on the weekends, you have a little bit of delta, but again, few dollars, and the movements are the same. So that that's not much of a problem. You know what I look at aggregate? I look at liquidations, like aggregate liquidations. That's something I use. CVD and OI. I look at the aggregate. The price action itself is not that vital because it's adjusted by market makers, by bots, and so on. So unless you're really trading on an illiquid exchange like Binance has become these days, and other exchanges with less liquidity, it's fine to just chart on Binance or something. As for the liquidations, CVD, OI, by all means use the aggregate. Yeah, that's what I recommend because a lot of liquidations on, I don't know, Binance, maybe they don't show up on, who knows, Deribit, okay, or Bybit, unlikely, but stay with me. And you don't want to miss those because the price is going to react uh, to big liquidations, same as Hyperliquid. Like all these exchanges, some will have liquidations, some have more, some have less. Uh, so I even removed BitMEX, but used to be my favorite. So aggregate data for that because liquidity shock, for example, you want to be able to read a big liquidity shock even if it doesn't happen on your exchange. Okay. So for example here, it's going to be very relevant on the 1 minute chart and the 5 minute chart. So I want to keep an eye on that if it doesn't happen on my exchange. Yeah, and open interest, same. Of course, I'm charting spot, so I need aggregate open interest other um, from other exchanges here. Well, actually, we can include these ones here for the open interest. Yep, and that's it. You use Bybit. Should I see Binance chart in terms of no? Bybit is good. Bybit is good. I use Hyperliquid, so I need a big exchange to chart. So that's why I recommend like to use a big exchange if you're trading on Hyperliquid or minor exchanges. But if you use Bybit, Bybit is fucking huge, so you're good by charting Bybit. Bybit, Binance, OKX, Kraken, Base, you can chart them directly. Yeah, especially Coinbase, Kraken, and most of the guys in this list. So Bitfinex, Bybit, Deribit, OKX, Binance. BitMEX, in my opinion, has lost a lot of liquidity, a lot of volume. And Hyperliquid, just for the way Hyperliquid works, I feel that sometimes there isn't much volume, so I suggest charting on something else and then trading with the Hyperliquid chart on a side, like for example on the terminal. But still, like you wanna maybe also look at a centralized exchange like Bybit, for example, or Binance. That's absolutely fine. Bybit on Bybit is good. It also price like for the TPO. In terms of footprint, it's I think it's fine for Bybit. Can you explain the Fibonacci one more time? It's like 1 minute explanation of the Fibonacci. You take a swing high, okay? a swing high, and the swing low. Okay, this is another swing high and another swing low. Okay, here is not, I don't see any swing high and swing low here. Like you can play this game everywhere. Let's do 4 hour. It's easier. Swing high. Okay, this is very easy. Swing high, all time high, swing low. But also swing high, swing low. Swing high, swing low. And you can just draw a Fibonacci here. Like this is one Fibonacci to the swing low. Then you have a little swing high here. So you take it as a top for the retracement. And you have the other swing low here. And you take it. Okay? And then you have another swing high here, and another swing low. So you just take the highest point of the swing and the lowest point of the swing and draw your Fibonacci retracement. And then you're going to trade up. You can find a very detailed explanation in my last price action article. It's pinned in my X profile. 4-year cycle dead. Who knows? That's something I'm not able to answer to, but I mean, so far we did the top and then we're nuking, so I don't see it as that. And that's why, until proven wrong, like I did 1.5, 2 4-year cycles almost. So, like consistently on the charts, consistently trading, and yeah, it doesn't look that great in my opinion. And you know, if you zoom out for a minute and take a weekly, like you could really like see the bear market here. This is 2021. Okay, like a few weeks of lateral market, it's the same thing. That's why I keep seeing we're going down. Like look at this thingy here. This very like 6 months, no, even more. Yeah, 6 months double top. Something similar here, much less clearer. But you know, it's, I don't even know if I should take these two as a double top or just the whole thingy. Well, if we went to the monthly, probably would look different. But again, they look very similar as a pattern. So, and then lateral for a bit, and then down. So same, lateral for a bit, and then down. Now, who knows down where, right? Because here the down was really in the 15s, right? Am I expecting to go down in the 30s? I mean, it's not the craziest thing Bitcoin has done in the last 10 years. So, like, really, during COVID, Bitcoin was, well, the chart is not going there, but Bitcoin was about like 20K or something a few years prior. Okay, so it feels like shit, yeah, but that's what Bitcoin does. Like there's opportunities. Some people will lose money, some people will make money. Try to be on the right side. Like that's why I'm doing this thing. I'm just trying to get as many people on the right side. Of course, I'm not buying any spot Bitcoin. I will keep buying hype, probably, because it's much less correlated than other tokens like Solana and so on. If Bitcoin nukes, Solana is going to nuke even harder. Like hype showed some autonomy in that, and also I think it is a good project. Before you ask, I don't feel the same about lighter. Not because I don't like lighter. It's just that the zero fee thing is not sustainable in my opinion. Um, if they start making people pay fees, then by any means I'm going to be optimistic. But like, you need a source of revenue, and yeah, they have something, but I mean, well, we can do that until the market turns really bad, and things can go really bad real quick on Bitcoin. So, and the market follows. If you don't have a revenue, you're not going anywhere. Like a real revenue, not something tied to your treasury, to your other assets, because they're all going to shit. Like in 5 years, 99% of whatever's around is going to be worth zero. Okay, except Bitcoin, hopefully Ethereum, maybe Solana, BNB, and a few others. All the rest is going to be worth zero. So if you fill your bags with stuff that gives you revenue now, but the market goes to shit, you're not going to be around. That's it. That's how I feel about lighter. So, but I'm sure they will start making people pay fees or something, because it's not really sustainable in my opinion. Right? Business that loses money. You want to master order flow. Yep, the scalping series will dive deep on order flow like the real shit. Like not footprint, but the book. Like we're going to read the book, we're going to read the DOM, you're going to look at the real orders. So yep, stay tuned. And there's going to be, well, I'm closing, but there's going to be a series of article. There's going to be some videos. No, me, I'm not releasing my own book. Sorry, we're going to watch the book like the order book. Sorry, I wasn't clear. Uh, we're going to release no book for now. I wish I can, but maybe in the future. No, it's going to be the order book. We're going to look at the order book and we're going to use that. There are going to be a series of articles, probably 6 to 10 articles, somewhere in between. Um, there's going to be video guides with the terminal within Silico. Um, there's going to be, well, for the guys also uh, in the psych ward, there's also going to be some strategies there. I'm going to release also some strategies like publicly, but the ones that are like a little bit more constituting edge, they will be released in the other section. But 99% of everything, like all the education, of course, would be free and stuff like that. Educational videos, and everything. So it's going to be a pretty comprehensive approach to scalping, because I think is the best for the people that want to make consistent revenue and don't have huge accounts. Okay, by any means, if you're trading like 3 lots on Bitcoin, then just do day trading or stuff like that. But if you're a small fish and want to grow your account, scalping has the superior edge for everything, because you compound very fast, your losses are very small, you don't use any fucking leverage, and I really insist on this. And really, if you can stack up even 1-2% a few times a week, that's a massive amount of compounding power. Like, there are guys out there scalping, like taking $2,000-3,000 and scalping them into 100K in a few months. It's not easy, okay? It's not easy, but it can be done. And it teaches you discipline, it teaches you how to read the charts, how to read the order flow, the real one, okay? The DOM. Of course, footprints can be useful, but on that very short time frame, you don't look at footprints. You look at the order book. You look at the tape, and that teaches you a lot about auctions, a lot about market, and you can test it very quick. You don't have to wait a week or two like a swing. Okay, you can test it in minutes. So that's going to be interesting, I think, for many of you. Hey, Yanis came back. Oh, poor brother. Kripo. Fatungui. Gwyn? I'm not good at pronouncing that. So yeah, that's uh, that's the plan for 2026. I dedicate at least 3 months at making good scalpers, and just struggling to train my mind on how to read the order flow and the order book. Just gonna keep grinding. Yeah, I like the thing is I don't know if it's your case, but most of the problem of the people I talk to or I mentor is that you try to do very complicated shit and you try to do many fancy things, but in the wrong place. Like, let me show you, and then I'm closing this. But like reading order flow, like it's relevant around these lines. Okay, if you try to read something into order flow in the middle of nowhere, okay, and I had another conversation uh, with Yanis today about this. Maybe you had a good call, okay, but if you read it in between these or in between these, it doesn't really matter. If you use confluence like support, Fibonacci, 2, 3 confluence points, and then you throw in order flow, then it's different. This is option one. Option two is you close your chart, okay, or you make it very small. You open the DOM and you look only at the DOM. And I'm serious. Like, it can be done. I do it too. Like, now it's not loading because I have too much shit open, but you can just look at the DOM, okay? Order book. Not even footprint, not even. And at that point, after you stare at the screen for long enough and see what the price does, you will start seeing patterns also on the order book. The problem is that I have to erase all the information from your head, the one that I put with a lot of time and effort. I have to erase it and I have to start explaining the DOM. So that's going to be the hard part. Like, you guys forgetting all the rest of the information for a moment and try to absorb how a DOM works. Then you put everything together and you're going to be amazing at that. But price action for scalping, guys, is fucking easy. Like, as long as you're disciplined, like, you can really trade fucking patterns here. Like triangles, the break, and go up like that easy. Technical analysis, you can do that. Okay, support and resistance. You don't even need to draw any trend line. Just draw good lines. That's what I said today. That's what I just hell. I posted these 100 times, guys. Just copy. Just copy these lines. I posted it every other day. Of course, it's better if you draw your own lines, but really, you just trade from level to level, everything. You just stay on the levels. Like, it works really well these days when the market is lateral. Well, now my Kiyotaka is not loading anymore because I think I have a few gigabytes of RAM occupied by this. But yeah, you can just trade these levels on the 5 minute chart, on the 1 hour chart, on the one, like, whatever you want. Just wait for confirmation. Read the articles they posted. Like, it's all there. It's just about being cautious, setting stops, and then I will also do some live trading. Maybe not these days because I'm just getting back to it, but maybe by next month. So by the end of January or something, we can schedule a live trading Monday, maybe Monday afternoon, something. It's just going to be scalping, so it's going to be fucking boring for you guys. But since you asked for it, I'll try to arrange it. Okay, nothing else. See someone typing, then I'll wrap it up. Much love from Australia. Hey, much love to Australia. It's 1:30 a.m., dude. Man, you stayed up late. Oh god, I appreciate it. I appreciate it. Get some sleep. Get some sleep. And closing this. Have you released the DOM video yet? Nope. 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 It's going to start probably end of this upcoming week or the next one. Thank you for joining, Sakai. Thank you for joining. And stay right. Take some rest, guys. For those that are in a later time zone than I am. And I think that's it for today. Thank you, bro. All right. Thank you all. Bye bye.